One of the names, Dick's Sporting Goods, was on the ledger today. They beat on the top and the bottom line. Shares were down, though, because the company is closing some Foot Locker stores to protect profits. The stock has come back. It's up 2%. Silence that. Thank you. As Stephanie Link buys this name.
Yeah. First time ever, by the way.
Yeah, what was the big draw for you?
Could I just go back on retail sales? I mean, I know that's September data, but it was up 5.7% year over year. So it's still quite healthy. That's up from 3.5% the prior month. But this is really old data. The other data I'm looking at for the consumer, JP Morgan comes out with their Chase card data every month. And card spend last month, this month rather, November, 4.5% versus last month, 3.3%. Johnson Redbook, they come out with data monthly as well. Retail sales at Johnson Redbook up 6%. I do not think the consumer is in dire straits by any means. The confidence numbers will have you believe that, but I don't. On Dick's, it's down 11% year to date. It was down 7% this morning. This is a very strong franchise with a phenomenal management team, best in class. Their core business was great. 5.7% comps. That was much better, and that was against a 6.4% comp last year, so they're comping the comp. It is Foot Locker that's the problem child. You know, Scott, I like those kinds of stories where there's a little bit of a turn that's going to happen, and I think that their kitchen sinking Foot Locker right now was very poorly run, which is a surprise, to be honest with you, but I think they're going to fix it, and I think they're going to continue to gain market share. Okay. Macy's, Gap, Walmart, Lowe's, Nike. Take a look at all of those. Dollar General, Five Below. That's where the action is today. There's Gap, up near 10%. You sold that last month. Maybe early, maybe not. The jury's going to be out on that. There's DG, which is having a nice move. Estee Lauder's notable today. We can throw that up. It was cut to a sell at Rothschild. Don't see it that often. Stock's not doing too much, but nonetheless, on a green day for retail, that one is not. Best Buy raises its annual forecast. And then how about restaurants getting a bump? Brinker's ripping today. Citi goes to 176. Notable there. Chipotle, Texas Roadhouse is a biggie today. There's Brinker. You bought more Starbucks. That's now your largest discretionary position out of this group. Why buy more now? It's really done nothing since May when the new CEO was announced, Brian Niccol. And so I want to take advantage of that because he is best management in the whole industry. In all of probably the S&P 500, he's one of the very best. And they are making progress on the turnaround story. But turnarounds, you know, take time, Scott. But they said that they were ahead of a plan last quarter. They had the first positive comp in 2 years last quarter. And they are fixing the store experience and the menu changes and mobile payments and that sort of thing. So I think that there's a lot that can happen that could go right for this company. It's not priced that way. And so I added to it, and I'm going to continue to add to it on any negative days. Shaq is up near 3% today. Josh, again, almost everything in this space is having a good one.
Yeah, look, I think these stocks basically sat out most of the rally this year. It just was not about the consumer discretionary. We do have this K-shaped phenomenon where the higher priced luxury brands have held up better, and then the middle class stuff has not done as well. And then at the low end, you've had companies find success. So we kind of have this hollowed out consumer. I don't think it changes anytime soon. Shaq's really unique because it's a growth story within the space, and I think investors are paying for this stock because they expect it to grow faster than its competitors. That's been the history over the last few years. I don't think that'll change either.